Hello there, Bryce Williams from Rutherfords Real Estate here. Just going to run through some economic and industry trends that we're seeing at the moment. In particular, going through a webinar that we had with Anne Flattery from REA Group. She's a chief economist there, and she went through a few slides that were very enlightening, and I'd like to show you some highlights of those today. So the first slide here shows that in 2021, we had a remarkable uplift in industrial sales, number of sales, most on record by quite a margin. Then 2022 was still very, very high. And then the first half of financial year for 2023 was the lowest we've had on record for the last decade. So quite a big shift, a number of interest rate hikes during that time. So this shows the breakdown of asset types that are classed under commercial. We're focusing on industrial. You can see there that it's hit every sector. So this one shows that inquiries to buy have come off a little bit, 11% there for industrial, which is understandable given the number of interest rate hikes we've had. The interesting thing is that we've got inquiries to lease are actually up, and we're really seeing that there's a large appetite for leasing, and that's why lease prices are going up. So why is that? Why has it gone down a lot? Well, lending's harder and rates are higher, but I believe the main reason is lack of stock. So the lack of stock is at an all-time low. We've got vacancy rates as low as they've ever been, and demand continues to outweigh supply. Industrial rents grew the fastest rate on record over 2022 and are still rising in 2023. Growth in e-commerce and also a little bit of local manufacturing, plus there's a higher level of holding goods that have been imported due to uncertainty in the freight and delivery sector. This slide goes through the offshore buyers and what they're looking to invest in. So you'll notice that in 2019, industrial was the poor cousin. It was down at 9%. Offices were really high. They were in 2018, they were 62%, the year before higher than that. But industrial is the one that's had the main change. So we've gone from 9% in 2019 to 42% in 2020. I'd also say that we're seeing a lot more interstate buyers as well as offshore buyers. We're seeing a lot more interstate buyers due to the lack of stock in Sydney and other parts of the country, and they're seeing Melbourne as a good place to invest. So we can see here the online spend before and post-COVID. Now, obviously that COVID and the lockdowns gave us a really big lift in that space, and it's continued after the pandemic. However, we're still well below other countries that are similar to us in the percentage that we spend online. And the long-term effect of COVID, if we look at it in online spending, is that the pandemic fast-forwarded us 5 years to where we would have been in online spending. So overall, the market is still very strong. lease prices continue to rise and stock continues to be very low. So we're seeing prices in the sale market hold at that really high level that we obtained last year. Hope that was helpful. Thank you. Goodbye.